What's up everyone, it's Scotty with Money Investing. In this video, I wanted to talk about one stock, one company that is going to be reporting earnings this week. And this is actually a stock that is trading very close to its fair value. So some even might argue that it's undervalued at the moment. And I've actually talked about this company before. So it's going to be a relatively new stock. I've only talked about it once. I think I've done a video on this company before just once. But again, we want to talk about it more and more because it's got a very, very high quality business. It is going to be a little bit of a different type of business. It's not like a technology stock. It's not like a SaaS company that, we focus on very much. So it's going to be a little bit different. And again, I've done one video on this company before. So we'll talk about it and calculate the intrinsic value in this as well. So I hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like, of course, subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining us and of course getting access to all the buy and sell alerts. A couple days ago, I actually got a very interesting comment from one person basically saying that, have you guys noticed the Caddy is doing a lot of these videos of stocks that are nowhere near close to their fair values? Every single stock needs to drop 20, 30, 40%. It's a waste of time watching these videos. Well, simple answer to that concern and to that comment is don't watch the videos, right? So you've got the decision, you've got the choice to watch or not watch, but it's up to you to not watch these videos. It's as simple as that, right? And the whole idea really is for us to create a watch list, right? Once you've got 200, 300 stocks that you know are high quality business, then you can keep track of these companies for when they are trading at fair values or when they are trading at undervalued levels. The fact that the market has rallied in the last 6 months, 7 months is the reason why there's not a lot of stocks, not a lot of deals out there. But hey, if you want to go buy Nvidia at 450, be my guest, right? If you want to go ahead and buy Tesla at 300, Meta at 250 or 300 plus, be my guest. Nobody's stopping you, right? Nobody is holding your hand and be like, hey, don't do that. No, it's up to you. You have the decision to make, so go ahead and do that, right? We're going to follow the process. We're going to trust the process here. We're going to continue to follow our system where we analyze companies, filter them out, and look for the best, look for the quality, and wait for the prices to come to us. We're going to be patient. And again, longevity and survival is what really are the key ingredients for long-term investing success. If you are looking for quick returns, if you are chasing those returns, if you want to make a quick buck, this channel is not for you, right? Most stocks we analyze, we're going to wait for them to come to our deal levels. We're going to wait for good deals. That's the whole idea, is that I want to buy coupons. I want to buy stocks with coupons, with discounts, undervalued levels, great deals. That's the focus here. So just wanted to put it out there. And again, that's the main idea. That's the objective. That's the goal with this channel. The company that we're talking about today is going to be Technoglass. Okay, so this is a company that basically supplies and manufactures and develops architectural glass products. And they basically service a lot of different commercial and residential construction in the US. So US is their primary market. Over 95% of their products are sold in the US. So they are a leading manufacturer, distributor, and installer of high-spec architectural glass and windows for residential and commercial applications. Global presence with leadership position in the US market, 35 plus year track record of product innovation and reputation for quality, and a broad portfolio of products specified across a well-diversified base of nearly 1,000 customers. And some of these more prominent buildings that you may have heard of or may have seen: Parcel, Washington, D.C., 50 United Nations Plaza in New York City. We've got the residential project in Florida, South Miami Dade or Dodd Cultural Arts Center in Miami, Florida. We got Fordham University in New York, Waterway Square in Houston. We got Brickell City Center in Miami, Hotel Marriott in Aruba. So those are some of the landmark properties, but at the core, it's a high quality product, exceptional customer service, allowing for them to service both the residential and the commercial market. So they pretty much create these big glasses that are used on, again, buildings, skyscrapers. You got residential, commercial, all these different buildings. That's what they provide, right? So it is a little bit of a different business, not technology, not like a SaaS business model, but very much hardware. And this is, effective position in the US market with over 96% of the revenues coming from the US. So leverage combination of high quality and our advantages of low cost vertical integration strategy to gain additional market share in the US residential and commercial end markets. They've got over 1,000 customers in North America and not single customer exceeding over 10% of the revenue. So they're not super concentrated or dependent on just one customer. This right here is their geographic locations for manufacturing and development, and they are across the board in South America, in Europe, and even Asia, so that they can leverage the lower cost. So you can see the multiple cost advantages to the US market. So even though they're servicing the US market, they're able to charge premiums and higher prices because their target audience is in the US, but their costs is distributed among other parts of the world, which is why labor cost is 8 times lower than compared to their US competitors. Energy cost is 57% cheaper, and we've got transportation cost, which is 36% cheaper compared to their US based competitor. So those are some significant advantages that the company has, but also creates a little bit of a higher barrier to entry in this industry. Improved gross margins. So from 2019, 2020, 2021, 2022, and now first quarter 2023, they've got to over 53% gross margins, with operating cash flow also positive and very strong at over $157 million in the first quarter 2023. So again, Technoglass has established a strong record of cash flow generation as a result of increased profitability, better working capital management, reduced interest expense, and more flexible or favorable mix of revenue as well. This is going to be their return on equity and capital, invested capital. So efficiency metrics, 32% compared to their US building product peers, 12%, right? So that's over 3 times. And again, this right here, return on invested capital, 18% versus 7%, right? So a little bit over 2 times in return on invested capital. Very, very strong company in terms of efficiency. And you can see that bar graph yourself. They've gone from $183 million to growing that to over almost $800 million. And gross profits have gone from $55.4 million to almost 400 million, and operating income has literally just gone parabolic from 27 million to over 270 million. So it's like a 10x growth in operating income, and that's the operating leverage kicking in with stronger efficiency and margins for the company over time. Now, the share count has sort of like stabilized a little bit. Obviously, they were raising a lot more shares back then, 2013, 2014, 2015, but now it's been a little bit more stable from 44.5 million to 47.5 million. And of course, EBITDA has also been growing very nicely. You can see those bar graphs over there. Very nice, consistent growth here. Every single year, they've been able to grow cash flows, margins, revenues, profitability, EBITDA, all those things. This right here is going to be that EPS expectation. So they are going to report today before the market opens at $1.07 per share, with the revenue pegged at $209 million. So we'll take a look at what the numbers end up looking like. So that's the expectation. And like I said, margins are incredible. Fantastic gross margins, net margins at 23% for a glass company. We got return on equity, capital, and assets. Very, very solid. Balance sheet is okay. The only okay part is net debt, 32 million, which is a very, very small amount, so it doesn't really matter. But debt to free cash flow is a little bit under 5, so we look for this number under 3. Current ratio, quick ratio is very good, but cash 140 million, total debt 172 million. So slightly higher debt than cash here, and the valuation's really, really low because the growth rate is not that high. So we'll take a look at the intrinsic value in just a minute, but it's trading at 12 times earnings, right? So really, really cheap valuation, relatively speaking, compared to some of the other stocks out there. And of course, price to sales at a little bit under 3, price to cash flow at 10 to 14, enterprise value to EBITDA trading at about under 8. So needless to say that it is very inexpensive valuation here for this company. Now going over to the forecast for 2022, expected to grow to $5. That's going to be about a 7% growth rate over the next 5 years. So this right here is going to be that growth rate from 2023 to 2026. Actually, that's 3-year growth rate of 7%. And I believe by 2032, I've put in an estimate of closer to $8. That's going to be a 7.37% growth rate, with the share count in the last, actually this is going to be from 2017, growing by 1.4%. So we're going to plug in 1% because, again, as numbers get bigger and bigger, the company is not going to be diluting shareholders as much as what they have already done in the past. So we're going to plug in about an 8% growth here, right, for Technoglass, just to be on the safe side. Again, I know 7% is the estimate, but maybe a little bit more on the optimistic side, 8%, because again, they've got the leadership, they've got the product, they've got the customer service, they've got the moat, they've got the higher barrier of entry, cost distribution, very effective capital management. So all those things make Technoglass a higher quality business, so to speak. So 8%. And of course, they've got the opportunity to diversify outside the US, right? 96% of revenue is coming from North America, but there's a lot of opportunity, in my opinion, from Europe, especially from the Middle East and Asia as well. And then price to earnings multiple, let's just keep that steady at 12. Right now, that's exactly where it's trading at the moment. 12% discount rate because I don't believe they pay a dividend. They pay us 7.78% dividend, so we can maybe go as low as 11% for this. Margin of safety 10%, and we're going to do 1% share dilution. We come down to a fair value of $42.27, and the market price is at $46 per share. So it's not that often that you see a stock analyzed by me that only needs an 8% potential downside before it starts trading at its fair value based on these conservative estimates. So you can see that again, the different growth rates and the different P multiples. Again, if you go with maybe a little bit of a higher multiple while keeping the growth rate intact, let's say that you go 8% with a 14 times P multiple. Now, of course, we're sitting at sub 50, $49, which is going to be higher than where the price is trading right now, theoretically saying that it's going to be undervalued considering a 14 times P multiple. But we're going to be conservative, like I said, 12 times 8% growth rate. I think it's more than enough, more than reasonable. And $42 is going to be that fair value, which obviously means that it would need to be down about 8%. So earnings, again, are going to be released pre-market. I've got a very strong support for this stock. By the way, this is going to be a level where it starts to become undervalued and a fantastic deal, in my opinion at least, which is going to be sitting roughly between 36 and 39. We've got the 200 SMA sitting at 37.80. That's the blue line you see on the chart, and a very strong support for Technoglass, very validated in March, validated in June. And if you do get down to that level once again, it's going to make for a very nice deal at those prices between 36 and 39. Not only is it going to be undervalued based on our estimates, it's also going to be trading at a very strong support, technically speaking. And of course, the last time it was at those levels, it rallied over 47%. So I hope you guys enjoyed this video and a complete update and a video on this new company. And again, I've done a video on this stock before, but we didn't talk about it enough. They're reporting earnings today. So we'll keep a close eye on this stock as well. Make sure that you drop a like. Of course, don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. And as always, happy investing. I'll see you all in the next video.